Welcome everybody to the live stream. Leave a comment so I can put you in the raffle. We do 2 raffles every Saturday. And just let me know you could hear me. Say I can hear you, or give me a thumbs up. And and the winners get a $20 Amazon gift card. So you have to get picked twice to win a raffle. No, nobody's okay. Loud and clear. Okay, good. And if you want me to do a DCF model, I could do one in like 5 to 10 minutes. All you have to do is donate on a live stream and I could do one for you. Last Sunday, I did a DCF. I was doing live DCFs and it was like the most money I made on YouTube ever. It was like over $200. Look at this. I got a $30 scratch off and I won 100 here. I don't know if you could see that. And then a 10x times 10, another 100. I don't know if you can see that. That's pretty cool, right? I had my third interview at the hedge fund. So after the interview, I got the scratch off. But I don't know if it's going to happen. Every job says they think I'll be too bored. Like I don't know. Everybody thinks I have, since I do I don't know if it's a YouTube channel or they always say like I'm overqualified or I'm going to be bored. It's going to be too easy for me. And every job is easy. I mean, anybody can learn anything. And after you're somewhere for a certain amount of time, for like 6 months or maybe a year, it's easy. You just do repetitively, you do something and then you just know it well. That's every job. Hey, Ben, because every job I've been at, a high schooler could have done what I did. You just learn it. As long as you have at least an average IQ, you can do most jobs. There's not many jobs out there that the vast majority of people can't do. It's not like being a brain surgeon. Most of the jobs out there are pretty simple. The only reason people become managers or get to high levels is because they're good socially. They have good people skills. It's not because they're the smartest person in the company. That's why they're the manager. It's just they play politics well. You have a quality channel and do great work. I hope you continue to produce. Yeah, thanks, Matthew. That's nice of you. Ahmed, would you talk about Best Buy? I could. I'd have to pull up their financials to talk more, but it's a good company, Best Buy. From what I know about them. Yacero. Tim C. But the hedge fund did say you may have to change your YouTube channel. You might not be able to give stock advice. So, but I don't know. I don't think I have to get rid of the channel. I just have to kind of change it a little bit. Thanks, Sahil. Appreciate it. Yeah, 26 people. I only have 13 people. So leave a comment so I can do the raffle. But if you want me to do a DCF, I could do one. It takes 5 to 10 minutes. I got this book. I usually don't read books, but this financial statement analysis book. And right in the beginning, it talked about a way to maximize shareholder value. One way to do it is to reduce the cost of capital. So if you could obtain capital at a cheaper price than your competitor, that's how Berkshire Hathaway has an advantage. That's one of the main reasons they have an advantage, is because they get capital at the lowest price, where another company might have to get capital at a much higher price. So that's a huge advantage. And they said something which is so obvious, but I never even thought of. It's simply stated, the lower the interest rate at which a corporation can borrow, which we know that borrowing debt at a low rate is good and better than a high rate, or the higher the price at which it can sell stock to new investors. So that's how, and I never thought of it as simple as that. So to calculate the cost of the WACC, the weighted average cost of capital, is the cost of debt plus the cost of equity. And cost of debt is easy. You just take the interest rate they pay in a debt, then you have to subtract out the taxes. So it's easy. It's a cost of equity that's a little confusing, but this kind of states it in a more simplified way. If a company is issuing stock when its stock price is at a 52-week low, then it's not maximizing the cost of capital. It's not maximizing how much it could sell stock for. On the other hand, if that same company sold stock at a 52-week high, then it's at its maximum point. Same thing when a company buys back its own stock. If a company like that had a lot of cash on hand bought back stock now when stock prices are really low, then it's a smart move, right? They shouldn't wait for the stock market to be inflated. Yeah, I've done videos on Tellurian. I don't follow it on a day-to-day basis. I just do the video every, once or twice a year, I'll do a video on them. That's why Berkshire Hathaway, I think, will double in price within the next 2 years, because they have so much cash and now they're buying up all this stock at a low price. The problem is, when a market crashes, none of us have cash because it's all tied up into the market, but they have so much cash on hand. And I mean, I own it, so of course I hope that, but that's what I think. Travel and van life. Doesn't it make sense? Isn't it logical? If I don't have your name, let me know. I only have 17 people. I think I got everybody that commented. Yeah, I got everybody that commented. Okay. But you could still comment. Oh. Invest in value. Yeah, everybody sub to invest in value, stocks, crypto, and bonds. I know you, Victor. That's it. I was trying to. So Victor has a channel that he does stock videos too. So invest in. I mean, check it out and sub. I mean, it doesn't matter A or B shares. It's the same thing except the price. Obviously, the same. You're getting the same type of equity. It's not like you're buying preferred versus common. So, but you should just buy the B shares. It's pretty expensive to buy even one A share. So just, yeah. But are you asking me what I own, an A or B? Or you're just asking what's the next bottom? I don't know. It's who knows where the bottom is. It just keeps. I just wish I had cash. That's another reason I want to get a job, because it's killing me not to have cash coming in to invest. I retire, as soon as I retire, the market crashes. So my plan was to sell stock over the next few years while I try to build up my YouTube channel. But it kills me to sell stock when it's down so much. Well, everybody knows I own one share of Berkshire Hathaway, one A share, which I show in my portfolio reveal videos. But $16, travel and van. Well, a lot of things are occurring. Investors don't like change. So if it's, as long as things move in a certain direction, whether revenue and earnings go up 5% a year or 10% a year, that's what you want to see. But if something changes, and it doesn't have to be, if revenue is going down 5 or 10% a year, that's fine too. But like we saw in Facebook, they went from revenue growing at 10-15% a quarter. Now that I think they grew 8% quarter over quarter, and their subscribers went down for the first time in history. So the stock got cut in half. They still generate $50 billion in the latest quarter of earnings. It's just that they didn't increase as fast as they were increasing. So as long as there's no disruptions, but once something changes, a stock could go from, like Tesla could go from losing 10 billion this quarter, then they lose 9 billion, then they lose 8 billion. The stock still goes up. But if Tesla goes from making 10 billion a quarter to making 5 billion next quarter after that, the stock crashes. This problem is with the reason it's crashing was inflation is a big reason. The supply chain is getting disrupted. The war in the Ukraine, there's too many disruptions. You just got to look at the value of the stock. And if you could identify the value, if it should be X and it's trading at half of X, then just buy it and wait. You don't know when it's going to go back to X. But if you're buying stocks that were always overvalued, maybe Tesla should be a $500 stock, not a $1,200 stock. So if Tesla goes down to 500, maybe that's where it belongs. But maybe a company like Facebook belongs in the $400 range. And now that it's in the 200, when things get back to normal, it'll go back to 400 or higher, where maybe Tesla won't go back. Kind of like all those Peloton companies, all those companies that price was really driven up during COVID. Now they're back down post-COVID levels. They're lower than they were before COVID. They never should have been that high in the first place. Hey, Richard, good seeing you. It's been a while. There's no donate button? That's not good. Well, thanks for considering donating. It could be your screen, your settings. It's a lot of expectation of performance. But yeah, so when a stock goes down, should it have gone down, and now is it now trading appropriately, or is it going down due to market forces? So it's a hard one for me to figure out too. So I don't. 17. That's it. Kahlua. Does anybody see the donate button? Like, can you donate right now to the chat? You don't have to. Do you see the button? Because if you don't see the button, then it kind of defeats the purpose of the donate for DCF. I did a video on Path. UiPath. It looked really interesting. UiPath. Half the time I do a video, I never even heard of the company until that day. Like they were trading at 70. Right, they IPO'd in April of 2021, and they went up. They went from like 60 to 70 right away, but they've been coming down ever since. But a lot of stocks, they start trading, and immediately the price is really inflated, and then it usually comes back down a lot. And then if it's a good company, it'll go back up, like Facebook did, or other big companies. But if it's not a good company, this looks like a pretty good. They went from 336 million to 600 million to 900 million. And they make, can you provide a value of service into Corporation International and compare it to other companies in the same business? Thank you, Mo, too. It's hot in here. Okay. What? Service Corporation International. SCI. SCI. Present to me for giveaway. The Alchemist. Investing. Education. Kyle. The Alchemist. Did I say the chemist? SCI. $14 US. I used to watch the beta on stocks. The beta is based on past performance. $69. PBR. The PBR has been doing really well. I mean, pretty much most oil stocks and commodity type stocks are doing really well. My ET stock is doing the best the past few months. Yeah, some of these stocks are paying unreal dividends. I think if you own Zim for like a year, you already got back your original investment in dividends in just the past year. Personal services. Bulldog, what's up? I came to your stream. It was really choppy. Like it kept going in and out. I don't know if that's common. Bulldog, everybody subscribe to Bulldog. 24-hour, 7 days a week stream. Personal services. Yeah, the shipping sector is really hot. It's a really volatile sector. Shipping. It's either amazing or it's terrible. Like it's more volatile than the airline industry, I think. I actually have I have a second interview with this company next week, And I really hope it seems perfect. It's a manufacturing company, and they want me to like do all the financials, like be like the CFO, the bookkeeper, everything financial related and accounting related, because they're small but they're growing. So it's like exactly what I want. Like I need control. I need to be in charge, because not that I can't listen to people, but I like to create my own processes. And maybe I shouldn't have said that. Probably didn't sound good. Yeah, I'd love to join anytime. And yeah, I'd love to have you on the live stream too. I used to have another YouTube channel as a guest. I used to do that a lot, but I just stopped doing it because it got a little annoying trying to ask people, like, do you want to be on my stream? So I just stopped asking people, pretty much. But yeah, but anybody who wants to, remember that guy, that I can't remember the name of the channel, but he wanted to charge me like $10,000. What was it? Remember? He emailed me. He wanted to charge me money he wanted me to pay to be on his stream because it will give me exposure. Like it was ridiculous. Do you remember that? He had a lot of subs, but he didn't get many views. He wasn't active. Okay. So this is. Let's look at this close. I'm coming out with $10, so it is hard to do DCFs. It's really, it doesn't. It looks too low. I don't know why it's coming out so. Oh, that's why. How? If something's wrong. Did I look at the right Service Corp International? I might have been looking at the. Okay, I typed in their earnings as their revenue. You guys got to catch me on this. Okay, so this looks right. This is good. So I'm coming out at 65. It's trading at 69. So it does make me feel good when the model is close to where they're trading at. It just gives me some comfort that the model makes sense, at least in some situations. So it looks like it's trading at the right level. Let me just look at one other thing. This companies, have they been around that long? Since the 80s or before? So yeah, according to my model, which is not like a guarantee, it's trading at the right level. So if I did this video a few months ago, we could have identified an undervalued stock, but right now it looks like it looks good. Let's look at the ratios. Yeah, I wish I shorted more because you could have really made a killing. Their growth is their 5-year annual growth rate is lower than average. So they may have plateaued. Because when companies grow like Google, Facebook, Tesla, Amazon, when they grow like 20, 30% a year, the stock goes up so high way before they make money. And then once their growth plateaus, like instead of growing 20% a year, they start growing 10%, then the stock price gets pushed really far down because people are expecting now is the time they plateau and start to decline as a company. So you have to kind of invest a year or two before it happens, thinking that will happen, whether you think the stock will go up or down. But they generate a lot of free cash flow. I mean, more than average, a lot more than Rollins. Rollins has a higher revenue growth rate, but their ratios look good relative to the average. So it looks like it's stable right now. You get your dividend, but I don't think there's that much upside. Yeah, I bought Amazon 2 years ago, and I think I'm down now. I was up until a few weeks ago. It's not fair. What's your cost basis for Doge, Agav? It's come down a lot. It's sitting around 8.5 cents, I think. I know a lot of people took a bath on that. That's most crypto. It's okay. 18, invest in value. 15. Yeah, AMD went up recently, right, from earnings. 22, Richard. 26, Kyle. 6, Tim. Wait, Kyle, what company did you mention earlier to do a DCF on? Travel and van. 22, Richard 1, Richard Keener. 20. Is Kyle still here? He told me to. Oh, he said Amazon. First time, wow. That's surprising. So if you want a DCF, just donate. You could just donate on this live stream and whack. Okay. Once I find a girl with some banging Wi-Fi, I'll live stream with you. Got it. Deal. Thank you, Victor. Appreciate it. Jack. Okay. I'm just cleaning the spreadsheet up so it's easy for me to view everything. Okay. So I'm coming up with 1757 for Amazon. They're trading at 2152. they have negative free cash flow in 2021, which kind of threw the model off a little bit. Okay. Okay. I'm just cleaning this up so it's easy for me to look at. So 1757. The projection, the company's projecting revenue of 700 billion by 2024. Okay, that's Jack. Let's see what Jack is. Jack in the Box. Does anybody like Jack in the Box? I haven't really been there much. I don't think I've ever been there. Maybe it's, I don't remember ever seeing one on the East Coast. So these future revenue targets are, the company provides, most companies provide future revenue forecasts and earnings forecasts. I've done Kroger before. I think that's a good, yeah, I think that's a good stock. I think everything looks pretty good on that stock. I have to redo it. Yeah, supermarkets are fairly safe stocks. Risk, low reward kind of stocks. Royalties, I don't know. I'm not too, I mean, I've done some royalty stocks, but I'm not super comfortable with. I think diversified royalties are also pretty safe. Generally, if you invest in a stock that pays a good dividend, it's usually a safe stock. There's usually not much upside. Like if you invest in a tech company, like there's a lot more upside than investing in like a utility company, for instance. Wait, something's wrong. This doesn't make sense. So I gotta fix this now. I'm not sure why it doesn't update in Yahoo Finance, for some reason, it's not updating the trailing 12-month number. See, it's the same as the 2021, even though they have more recent numbers. So I could just sum the prior 4 quarters. It's the same thing. Okay. I guess it's the same result. Is this right? It's seems really high, 170. They pay a 2.5% dividend. At the peak, they were 121. Well, let's look at some sector. Yeah, 170 seems a little high, but if that's what it says, it's funny. A lot of people are, when they join my channel, they're so excited, and then like when there's a bear market or their stock goes down, I never hear from them again. Kind of like the gym. If you go to the gym in January, it's really crowded. There's New Year's resolutions. But then if you go, the fuck? Okay. Then if you go in February, half the number of people are at the gym as in January. Then if you go in March, it's kind of where it is. The regular people, the all year round people are there. It's kind of like investing, people get all excited and they only last a month or two. And if they take a loss, they stop doing it. You just gotta keep plugging away. You can't expect instant results. If you're 200 pounds overweight, you need to spend at least a year at the gym. Don't expect, and you have to actually work out too. You can't just go to the gym. Like if you want to be a millionaire, it's gonna take more than like a month. You have to add money to your account each month or every quarter, or you can't just put $1,000 in there and expect $1 million in a few months. They have negative equity. Yeah, They have negative earnings too? Wait, trailing 12 months free cash flow 70 million? What do you mean? I'm not coming out with 70 million. No, it's higher than 70. Unless you're looking. Yes, CB 350. That's a big reason some companies have negative equity, is because they buy back stock, like Boeing or Starbucks. They bought back so much stock, they have negative equity. See, wait, I have to fix this. This was changed from the last video. It's still the same. I don't even need net income for the DCF model. I'm just gonna. Yeah, I mean, the forecast is for their revenue to grow a lot, to grow like 80% by 2025 if they grow at this pace. But yeah, sometimes I do the DCF and it doesn't make sense. I'm not saying this doesn't make sense. I'm just saying, well, whatever. Yeah, because if you look on, like, I know Boeing and Amazon are a good example, and Starbucks. You see that they had negative equity for a while. Well, 2018 it was positive, but since 2019 they had negative equity. I don't know if this is updated, but they buy back a ton of stock. Starbucks is the same. Thank you for another donation. Well, maybe that's why their revenue is projected to go up so much, because of Del Taco. CC? What's CC? Silverhawk. Yeah, it's okay. You don't have to donate if only if you want to. CTRN. Historical financials. I wonder why it doesn't have the. Well, look at that. Simply Wall Street's at 100. Look, that's a high whack too. 10.4. 24. Okay, 562. You see all the big discount stores are really are all tanking, right? Costco, a couple other ones really. CPS. Really, like it's such slim margins. Look how little free cash flow they. Why is it the same? Is it against? Oh, let me Sky T. You mean Skyworks? Who? What's Sky T? It seems really undervalued. Macy's, a Skywater. Macy's did what, and Big Five did really well. Is Macy? I remember. Okay, so it's not. I think it's still above pre-COVID levels. Yeah, it got real low. I remember that on COVID. It was up to close to 30. It's still trading above those levels. Yeah, it looks undervalued. I guess people think it's going to go bankrupt. Do they have a lot of debt? Well, let's look at their oh wow, their debt to equity ratio is 59. That's why. I think. Yeah, I think that's why they think they're gonna go bankrupt. Sometimes these websites don't have correct numbers, because it looks like it's more like 2-to-1 debt to equity. You know, they only have 6.8 billion of debt and 3.6 billion of equity, so that's like 2-to-1, not 60-to-1. Yeah, I don't know how that's. It's not that bad. 7 billion of debt, 3 billion of equity. I don't think it's bad. I mean, they have 1.7 billion of cash. Maybe they've been. Yeah, they added a lot of debt during COVID. 2.8 billion, then another billion in 2022. They were paying down debt before COVID. Yeah, Rad looks pretty sad. But look at their free cash flow. That's ridiculous. It's almost like they're just giving you the stock, right? A 2. That's weird. Thank you. See, somebody's paying attention. I do this a lot too. When I do my model, then I realize that once I look at the numbers that okay, this makes sense. This makes sense. 6 billion of debt, 100 million of equity. And they don't really have much cash. Here's kind of like a sign I look for, that when a company is not issuing stock, they're just funding their growth on debt, that could be they're headed towards bankruptcy. Because think of it, if you were personally heading towards bankruptcy, you'd be trying to max out your credit cards, right? You'd be trying to get loans. You'd be trying to do anything to get that money, because you don't have any assets to sell. You can't sell your car anymore. You can't sell your house. Your assets are depleted. You need to keep adding debt in order to pay your bills and before you ultimately file bankruptcy. So that's usually you you issue stock in the beginning years. And then once you grow, you add debt because it's a cheap way to finance. But as long as you're generating plenty of free cash flow to pay the interest payments on the debt. But once you start issuing an extreme amount of debt to fund growth or to pay your bills, then you may be headed towards bankruptcy. Yeah, so I probably would avoid this stock. Because the DCF looks, if it survives, exactly, yes, there's a lot of upside. So as long as you understand the risk, yeah, exactly. And it's a safer investment than a company that's pre-revenue or a company that's just starting out, that's struggling. 25 billion of revenue is nothing to sneeze at. Okay. Anybody else? Any other donations for DCF? And another sign that you're headed towards bankruptcy is when your price multiples are extremely low, like these, a 2.0, a 0.01 price of sales. They don't have positive earnings, but if they did, it would be a really, really low PE ratio. Like right before a company goes bankrupt, they usually have the best price multiples. Thank you. $20. Very generous. I appreciate that. CMCSA. Comcast. Was it always that ticker? CMCSA? It sounds like so long. Big donation. Where is it? That's why I didn't pick the right sector. They're big in Netflix. Netflix is in bad shape, right? Unbelievable. Thanks. Okay, no problem, J Pow. High ball. What are you looking at? What are we looking at? High max. It's not high ball, it's high max. The semiconductor company, high max. It's a 120 billion. It's a lot of revenue. Okay. Let's see. How much debt do they have? They probably have a lot of debt. 95 billion of debt. I'm going to just up the whack a little to take into account all the debt they have. So it does seem undervalued, but they have a ton of debt, which is a little, maybe a reason the stock is not as high as it should be. But they have really good 11 price to free cash flow, which is really good. The industry average is 30. They're better than almost every company. And they're still growing at 8%. Look at Netflix, 26%. Well, Netflix, look at it. It was a king. It's almost 700. Now it's 186. $30 billion of revenue. They're trading at, what are they trading at? 83 billion market cap. They're trading under 3 times revenue. People probably love this stock when it's trading at 50x revenue. Now it's trading 3 times revenue, and they won't touch it. And they're profitable. It's the they're back. They spend so much in content, so they're back to negative earnings. They did good in 2020, but I don't know. It doesn't look good for Netflix. I don't think they're gonna go. I don't think they're gonna go bankrupt or anything, but you know, a lot of people are leaving, so. DraftKings. I don't like SPACs. I try to avoid SPACs. I don't like SPACs, and I don't like gambling stocks. So it's already a 2 strikes. But if you exclude those 2 things, let's see. Well, they still have negative cash flow. I mean, their revenue's going up a lot. So they're probably headed in the right direction. SPACs have a terrible track record. The worst track record. It's like I would say like 9 out of 10 lose 75% of their investment in the first 18 months. Maybe 1 out of 10 makes some money. I don't know. Inflation, how it. What do you? Inflation has not been affecting them. Well, yeah, that's true. Inflation, I guess, wouldn't affect them as much as like Costco, because I mean, generally, like a supermarket is really affected by inflation because all their the price of all their products goes up. They have to, everything has to be delivered to them, so everything is affected. Where tech companies are not as, but you just raise your prices. That's how you adjust. So, I mean, I don't think inflation should affect any business as long as they're not just sitting on a ton of cash. Because because inflation is a tax on cash, on savings. So as long as you have assets, inflation moves with those assets. If you have real estate or inventory, but I don't know. I mean, you think you figured it out, the market, and then something changes, and then you realize you know nothing. So, I mean, I'm just trying to explain it logically, but when you put into practice, the market has its own rules, its own ideas on what's go down. It's hard to. Cisco. You're talking about Cisco with a C, right? Okay, because there's 2 Ciscos. There's a food company. Yeah, Cisco. It's a really solid company. It's always been pretty solid. You just got to look. Even companies that are really generate tons of cash, like like some of these mature companies like Amazon and Facebook, they're starting to plateau, and we might see some decline. So that's why people aren't buying the stock. They want like a stock like a Tesla type stock where it has that future growth. Like they want to see like 20-30% growth a year. They don't want to see like 49 billion, 51 billion, 49 billion, 50 billion. I mean, 50 billion is a ton of revenue, but you want to see growth, even if it's 5% a year. You don't want to see like a straight line like this. So it's back to where it was in 2018, Cisco. Look at that. Yeah, this looks like Intel. Look at this. Let's chart it next to Intel. Let's see if, because that I can't do it. I want to do it out to 2000, but it doesn't work. Exactly like Intel. Isn't that amazing? Like 2000, it was like the greatest thing in the world. That's crazy. They're still, if you bought these stocks in 2000, 22 years later, you'd be down like 50%. I'm sure if you got dividends, it would look better. What's a company? What's a company that's similar to Intel? I know this is not going to look normal, but so you can't look at NVIDIA. You can't even look. Yeah, they say that every company, once it plateaus, Dell's probably similar too. Yeah, every good company has a good run, and then they plateau. Some companies never have a good run. They just never go anywhere. Like 95% of companies. Because you can't grow forever. There's only so many people out there that can buy your product. At some point, it's just going to be replacement products. You can't just, or, the new people enter the population, but once you grab a large portion of the market, it's just trying to sell to people to replace their product. Yeah, Microsoft and Apple are like the exceptions. Like they can grow forever. There's no IBM. Yeah, IBM is different. Yeah, IBM is exactly the same. Oracle. The IBM had a nice run in 2013. That's why I'm bullish on Facebook. I really think they're going to kind of reinvent themselves with the Meta platform. I hope I could retire on my Facebook stock, or I'll just have to keep working. But that's my. Yeah, well, Coca-Cola is different. Coca-Cola is you constantly consume it. When you buy like a car or a computer, it lasts more than like an hour. Like Coca-Cola, yeah, you could constantly drink it. Consumer products are. This is interesting. It makes you think, right? Because 20 years ago, there would have been someone like me talking to a bunch of people about Intel, like how Intel is the greatest thing in the world and nobody can overtake Intel. And now 20 years later, I'm talking about Facebook. Cyber. Yeah, I put a lot into CrowdStrike and that really messed me up. I think it's in my phone. Yeah, I got it at 200. I remember I bought it like right at this point. No, that's March. Yeah, I got it in the middle of 2021 at 200. 197 actually. I got it 197, and then I was up 50%, and then I got downgraded. It has come up since it was under 200. I'd be back up right now. I don't really do options. I used to trade options, but not really. I don't really do options. Uber, I'm not. I like Uber as a customer, just not as an investor. Yeah, KO is like a bond. Yeah, lots of stocks you buy. It's kind of like a safety stock. That's how I thought about my Kraft Heinz. I thought of it as a nice safe stock. How much? Yeah, I was doing well. It really hasn't. I forgot where I got it at. I know it was April 1st because it was on April Fool's Day in 2021. So I paid 41, and then right away I was up. I'm almost flat. Yeah, I don't know what earnings. I don't really follow companies. let's see, Zoom is Monday earnings. Xpeng, the EV company, Tuesday. Intuit is Tuesday. Best Buy, somebody talked about that earlier. Nvidia Wednesday. Snowflake. Baba, oh, Costco. I'm probably down. I was up like 60% on Costco. I'm probably down now. So annoying. Another Chinese stock, Pinduoduo. Canopy, the cannabis company. Costco. It's not going to do well. I mean, I hope it does, but all these big. The thing is, when with inflation, all these companies like Costco have to pay extra money, but they haven't raised prices on their goods yet. It's like kind of like there's like a delay of like a few months, like a month or two before they catch up and raise prices to be in line with inflation. That's what it seems like. That's just my guess why. Yeah, I wish I never bought Baba. When it was like 80 or 90, I bought it. Or maybe I bought it at 100, then I bought it again at like 80. Or maybe it was 90. Because I remember watching it from 300 to 200, and then I think I got it at maybe like 110 or 120 maybe. Then I bought it again at like 90. But it's frustrating. It was too hard not to buy it, the low hundreds. I just couldn't believe it got that low. I get excited when I see stocks drop like this. It's so exciting because it's such a buying opportunity. I just need some cash. Like if you look at these crappy companies like Peloton, like it's trading, like if you bought, like if you bought Peloton in March, if you somehow had the foresight and you were up like 500% in a few months, I bet you a lot of people now, they're down 50% because nobody would sells at the top. So when it goes down from like 150 to 100, nobody wants to sell at 100 because it was just 150. I'm not going to sell at 100. And they wait, it goes up to 120. So now they feel a little better. And it just comes right down. Wheat is an ETF. The thing with Costco is once earnings from its competitors came out, their stock dropped because people knew if all their competitors are posting bad earnings, they will too. So it's all priced in right now. So I don't think I don't think the stock's going to drop much after earnings unless they really, really have bad earnings. But it actually might go up a little bit. So if you want to short Costco, you're probably too late. You had to do it before its competitors posted earnings, because I think it's all priced in. Because look at this, was it 5.7? It went down 70 points in 2 weeks. I got it. I'm probably getting close to break even. I think I got it in the low and high 300s. I was up like 70%. Now I'm up 10%. I don't know. Is the 15 sounds low, like a low PE, but maybe, I don't know. Is this the PE or? I guess it's the PE, because that's what I Googled, but it looks like 20. It looks like, I'd say in the low 20 to 25 is average, but it's hard to tell. The Great Recession, it was over 100. It was 30 last year, 37. Right after the dot-com bust, it was in the 40s. But yeah, but it's usually, it looks like, yeah, it looks like it's usually around 10 to 15. And this survivorship bias. So as companies fall off the S&P 500 due to like a struggling business or bankruptcy, they get replaced. I don't know. Okay, if there's not any more donations, I think I'm gonna call it a day. So yeah, thanks for joining. Make sure you email me if you win a raffle, and I'll see you next Saturday, 6 p.m. Okay, bye.